Okay, guys and gals, about 10 seconds of the obligatory disclaimer. If you want to read the whole thing, just pause the video. Welcome, everybody. Let's take a look and see what happened in the stock market today, which would be December 20th, 2021. Pretty big down day. This candlestick right here, this red one, that's a new session there, so ignore that. It's got down as low as 45.20. Okay, so and the range was 101 and a quarter. So pretty big day. And frankly, I'm not surprised. I talked back, I think it was on this day here. On this day, it hit all-time new high by a few points. I said I didn't think that meant anything yet, and that the market was going to prove itself, and that there was a better chance that we'd come down. Well, sure enough, 3 big days in a row. And this cycle low here is either the day after Christmas or the 22nd, okay, which I believe would be Wednesday, if I'm not mistaken. Yes. So there's definitely downward pressure. Now, if it's the 22nd, and some say the 21st, anyway, it doesn't really matter specifically what day. We just know that there's a good chance there's a cycle low right in this area, okay? So just be prepared for that. Right, that prices could come down somewhere in the next few days to a week at the most. Would be a daily bottom. It could extend. That's always possible. Sometimes you see cycle lows extend and go long. You know, they continue to. So instead of ending right here, sometimes they'll keep going. Right? Well, it might be up here, whatever. Okay? But usually, once we get to this cycle low within a day or two, or 3 at the most, you'll start seeing a bounce and going up. So just keep an eye on the next few days to a week. Could be the cycle low, and that could be it. All right, for now, the market's still weak. Okay, the indicators are kind of bottomish here, but the MACD did that and began to widen out again. So that's not a sign of strength, and we're well below the 50-day here. We're further below the 50-day than we were at any time during the September-October quarterly expiration event that we had. So this candlestick is further below than any other candlestick has been in the last, 2 months. All the way back to this point, obviously, or obviously this over here. I shouldn't say quad witching, I meant to say just this section here. Quad witching's over here, and obviously got much lower. So, in the last month is what I really meant to say. It hasn't gotten below, this is the furthest it's gotten below the 50 in the last month. So, pretty significant day right there. Okay. And, not quite convinced it's done yet. Not quite convinced based on what I'm seeing here. Nothing's pointing up yet. Not even the forecasted and predictive Big Daddy's pointing up yet. It's still pointing down. So chances are this is probably not over yet, and there's more price decline to come. All right, let's take a look at the monthly. Okay, so we have maybe a week and a half-ish, 10 days, 10 calendar days left, and that's obviously whatever, about 7 trading days or something, whatever it turns out to be. So there's not a whole lot of time left for December to be green, okay? And there is weakness here. There's definitely weakness. Been talking about this for quite a while. But right now, these two candlesticks, yeah, they're red, but they're really, really small. I mean, and sometimes we look at these type of candlesticks and say, well, those are kind of like spinning tops, and on a monthly chart, that could be a big deal. It could be a big deal. We'll just see. But right now, we're not seeing any huge candlesticks on the monthly chart. Okay. Let's look at the weekly. That's definitely weakness. So on the weekly chart, guys, I think there's more to come. If I were just looking at the weekly chart, looks like there's more to come here. But like I said before, we could get down to this area right here and it could do a bounce. That's definitely possible. So that, we'll keep an eye on that. But to me, just look like there's more price decline. I could see us getting below 4,500 maybe. Okay. At least from a weekly perspective, it looks like that. Doesn't mean it's going to happen. Okay. So just keeping this really simple real quick, I think there's more price decline, better chance of a higher probability of price decline tomorrow or at least the next day or two. Okay. We might get a green candlestick in here, but what I'm really talking about is prices staying below the 50. Okay. So I don't know if we get a green day and it does that, then the next one says okay, and then it does one of those. Okay. I think overall, at least for the short term, we're going to see more price erosion and probably stay below the 50-day, or at least most of it will be below the 50-day. Okay, premium members, looking at the hourly chart. Wow. Big day. Started right there, already well below the 50, obviously. All right. Pretty much whole day's down. And then the last 4 hours were an attempt to rebound. And, well, we're still, it made a pretty decent rebound, but the 50 hours, take a look at this hourly chart. Okay. Man, that chart right there is a thing of beauty for intraday traders. It's just amazing looking at this chart. There's so many opportunities on this chart. It's crazy. Thing of beauty for intraday traders. I'm just looking at this as possible resistance. So obviously this first 3 hours right here for the new session. Today's session was a no-brainer. I mean, just trade it short. I mean, look at the MACD here. That was X amount of hours. When I say today, I mean the entire 23-hour session. I don't just look at intraday. So most of that was probably last night. Let's see, when did it? Yeah, 3 a.m. From the time that the market opened last night all the way to 2 a.m. My time here in Texas was huge money. Huge. Sunday night, Monday morning. Very nice. We'll just see what this thing does. Is it gonna be resistance here? I'm inclined to think that the price decline is not done yet for the Christmas season. So tonight and tomorrow will be a big tell to see if does it get above this 50, does it stay above the 50 hour, or does it get rejected? That would be your big tell or evidence that you're looking for regarding strength or weakness in the market. Okay, right now I wouldn't trade it. I wouldn't trade this sideways stuff. I wait until it gets rejected and trade it. Okay. Now, if the market gets really, really strong and the daily cycle is over, okay, then great. You can start thinking about trading long. Let me look at the hourly chart here. And this hourly chart may need to be updated. May need an update. Just looking at what I got here. Look pretty good here, here, here. Wow. Yeah, it's a sign of weakness. This the way the hourly chart looks to me right now, it's looks a little weak. Just the way that there's been a shift here in the hourly. You can see it kind of tried to bottom right here, and that wasn't enough. It tried to, and then bam. So I don't think this is over. I think there's more price erosion. Keep an eye on that hourly. If it gets rejected off of that, you can trade it short. I'd just be looking for 2 red candlesticks and trade it short if it happens. I mean, the MACD says that things are going to be looking up. Okay, but how much up is really the question. How much up? Are we talking up to this point? Somewhere over here, rejected? We're talking up and then up, and it takes off. Okay. So keep an eye on that hourly chart, whether it gets rejected or gets above the 50 hour. And the MACDs, guys, is just, I mean, this is really, this is going to really help you out, okay? Just as it did in this area here. Okay. Price was eroding this whole time. Okay. And then even in this section, see how it never crossed over. It just came up to it. That's a sure sign of weakness when you see this. Still heading down, and it doesn't have the strength to cross over. It just kind of flattens, but it's going down while it's happening. Oh yeah. And then it was bombs away. Okay. Let's switch over to crude oil here. Daily chart. Wow. Crude is just weak. I mean, it's so far below the 50. It was a few days worth of recovery there a week and a half ago, but chopping sideways with a tendency to go down. So, I mean, just looking at this right here. Now, the one thing that we got to pay attention to is that this cycle low, this daily cycle is, okay, that's tomorrow. So there's a daily cycle due, not tomorrow, I'm sorry, Wednesday. Okay, be mindful of that crude oil has a cycle on December 22nd. Okay, it could go a little longer because some of the products are Christmas Eve, some are the day after Christmas, so just be mindful that could be a few days difference. But there is a cycle low here, and crude oil has been pretty much spot on within a day or two on, well, not all these cycles, but the recent ones. Okay. This one over here was a little bit early. So I definitely want to be mindful of that we could be hitting a cycle low, and you may see crude oil get a bounce there. But for right now, it still looks weak to me. Let's go look at the monthly. Okay, green candlestick, but none of that looks good. Well, I shouldn't say. I don't know why I talk like that, because that's just opportunity. Price decline. That's what these indicators are telling us. Price decline. With divergence warnings going on here. So, good chance, and this is starting to narrow down here, this MACD. So, on a very long time frame, the monthly chart, crude oil looks like more price decline. Let's look at the weekly. Just barely staying above that 50-week, boy. 1, 2, 3, 4 weeks now riding on the 50. Crude oil gonna have to prove itself that it can get its head above water. Right now, it's sitting around that the blue 50 week, and trying to do it, but not doing it yet. So everything still shows crude oil as being weak. Let's look at the hourly. Wow, that was pretty massive. Where is that? So, yeah, 5 o'clock. Right there. So from last night, the session that opened up was right there. And geez, my goodness, what a huge trading. I mean, for new members, and I know a lot of you already know this for members that have been around a while, but since crude oil is weak and it looks weak on most of the charts, then I'm not even waiting. As soon as I see this red candlestick, I'm just trading it short side. I mean, just look at all this opportunity last night. All right? And any second red candlestick is absolutely tradable. So if you were being really cautious, you'd trade that one. And this one, I've talked about this a lot, of course. As soon as this red candlestick got below that lower wick, and I talk about that all the time, you have all that to trade. And that candlestick is as pure as it gets. There's almost no upper and lower wicks. So as soon as you get below that, you got a whole lot of nice money being made right there. Right now, as it stands for the first 3 hours here of crude oil, I just wouldn't trade it. Same as the S&P 500. I wouldn't trade it yet. I'll wait to see if it gets rejected off this 50 or does it go above it. Okay, that's how I'd play that, as they say. Okay, let's go on to gold. And remember, crude oil, guys and gals, you can, if you're trading the futures, you can trade the MCL /MCL, and for gold, you can trade the /MGC. Those are E-micro products, really nice. Well, gold just, well, it's a little bit weak here. It's continuing to be a little bit weak. It's got a lot of chop going on. It can't seem to stay above the 50-day. For a while there, I thought something good was going to happen, and it did for one day, but then it gave it all back up, and now we're back below the 50-day. So this just doesn't look strong. A lot of these commodities, man, they are not looking strong through the Christmas season. So again, if I was trading, even swing trading on gold, I'd trade it short. Okay, let's look at the monthly. Downward, 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 still downward. That's got maybe a little something, but yeah, just downward. Talked about this shape many times already over the last week or two. Okay. And I'm just going to say the same thing. I think gold doing this, it did this, it came down to this, going up to this. Okay. That's it. Well, that's interesting. Let me redo this. I could have swore it was 1690. Maybe my triangle's a little sloppy. Let me be a little bit more careful about the way I draw this. Get it right in there, kind of like that. I could use some better geometry here, but I'm just going to eyeball this for now. And then if this triangle really begins to shape up and continues this kind of candlestick behavior, then we'll draw some much tighter lines and get this exact. But for now, this is fine. All right. Yeah, well, okay. So 1660, 1670, at least high 1600s. Sometime in February, maybe March, on that monthly chart. So that's what I see gold doing. I don't see it going up. I see it going down. Let's look at the weekly. Riding around the 50. Gold can't make up its mind. Kind of just sitting on this 50, just below it. Comes up, gets rejected. A little above it, gets rejected. Just kind of tracking sideways here, right around this 1800 line, just for the last, wow, how many months now? Since like July. It's just been sitting up just above, just below or above this 1800. It did get pretty decent here. Got up to almost 1900, but so there's opportunity there, but it's there's definitely opportunity here. That's opportunity. All this is opportunity. Okay, let's look at the hourly. That's the whole day right there. The whole session. And again, just like the other products, considering how weak gold is, below the 50-day, you're trading all of that. Right? You're trading anything below the 50 that's red, you trade it. You just short it. Okay, and just use your proper stop losses to deal with any kind of candlestick that starts to get away from you. Right? But on the average, you would have made money because you'd be trading that one and that one and that one and that one. You might be stopping out on some wicks here. Okay. all that. Those candlesticks are really nice because you have very little upper wick, so you get almost an entire candlestick down to trade. I mean, it's kind of tight trading, but you're gonna make good money on the average here, right? And guys, I talked about this before. What's there not to love about this MACD? Look at this. It never crosses over this entire time. You know, I'm not saying you need to stay in it through all that choppy stuff, but even if you did, so what? You just wait it out. I mean, from about the time the MACD got crossed over, somewhere in there, you just made this trade. Okay. Admittedly, it'd be a little tough to stay in it with the SMI starting to come up right there. And as I said, you don't need to stay in that chop. You can get out and re-enter. As soon as this SMI starts to roll over and the MACD still telling you you're good to go, heck yeah, trade it again. Everybody get that? You stop the video, go back, pause, and listen again about what I just said about how this MACD never crossed over, and you could time your short side trade there. You'd get out, you know, on this, in this area here, because obviously it's going up and you're getting all that choppy stuff. And by the way, with this SMI being this strong and all you're seeing is chop, you know that that on the hourly, this product, which happens to be gold, is weak. Because here you got this SMI telling you, wow, look at this big old SMI move, and yet the candlesticks just track sideways. That's weakness. Okay. Okay, let's move on to natural gas. Natural gas has been tradable on intraday the last couple days. So we'll get to that hourly chart here in a bit. Daily, on the daily chart, I wouldn't trade it. It's still just absolutely chopping sideways. It's not natural gas right now is a trader's product, meaning day trading, but it's not a swing trader's product. I wouldn't trade this at all for any kind of swing trade. I wouldn't hold it for more than an intraday trade. I wouldn't hold this for days. It's just not something I would do. We don't even need to look at the okay, I'll look at the monthly and weekly. Nothing's changed. I know that I can just tell. This is all the same. This is big old huge weakness still going on. And these indicators say that with divergence warnings. Still a lot of weakness here long term. The weekly chart. Big Daddy's trying to tell us there's strength, but that alone isn't enough. This is huge. This is still huge. Still riding on the 50. There's even a little gap there. Gap down on the weekly, so this is a sign of weakness for now, for sure. Okay, let's look at the hourly. The hourly, now that's a nice looking chart. Well, this is so tradable. You know natural gas is beat up, so as bad as natural gas is beat up on that daily chart, I don't care. I mean, I care, but I'm less concerned about being above or below the 50 on the hourly chart. I just trade anything red to the short side. Okay, but it would be better to keep good practices in place, and I would trade this candlestick right here. Okay, I know it's a couple sessions ago, but just as an example, I would trade this candlestick right here as soon as it got underneath the 50 and started going. And I'd trade this one too. And you all know me, those that know me, those that don't, I would trade the second red candlestick and just stay in the trade. And why? Because the MACD says to stay in the trade. Okay, so this is today's session, the one that just ended. Would I have traded this? No, I would have traded other products because I wouldn't want to be trading long when the daily chart shows you should trade short. There's definitely a huge opportunity there, and you could trade the MACD. Aggressive traders could trade that, and they made good money if they did. Personally, I wouldn't do it. Okay, I would just stick to the simple rule. The daily chart and even the longer term charts look they don't look horrible. They look great for short side opportunity. Okay. So on the hourly chart, I would just favor shorting. Every time I see shorting. If it's a day like today we don't have shorting, you don't touch it. You move on to other products. That's all. It's that simple. So now the new session right here, this be a little tough to trade above the 50. It's a little tough to trade above the 50, so I would wait. But if you wanted to be aggressive, you could trade it. Trade the red ones. Okay, let's move on to wheat. Which, by the way, for wheat, guys, you can trade the E-mini, which is XW. Okay, few green days. Really, just two strong green days. This was a huge, well, part of the day was red. That's today's session, the one we're talking about. Well, hold on a second. Maybe I'm wrong. What time is it right now? Yeah. Okay. Yes. So this long-legged doji candlestick right there. That's the session we're talking about. That's the session that just ended. So, in any case, even though we had a couple green days here, this is all still weak. Short-term indicators are saying we're going up, but you're up would be good. Well, it's up, but it's below the 50 is what I really want to say. So for now, wheat still has weakness, right? There's still weakness in the wheat product. And I wouldn't trade these long below the 50 like that. I certainly would have traded that day right there. Monster mash day. And this day that just started, red, yeah. If it's already below the body of because there was no body on the doji, I'd be trading that. I'd be trading wheat right there. It's a little risky because these indicators are saying things are going up. So if you want to be patient, just don't do it and see what it does. But so far, it looks like wheat's been getting rejected off the 50. So any kind of rejection, like part of this day obviously was a red candlestick. So any time during the day when that candlestick was red, especially below that lower wick of the previous candlestick, you trade it. Okay, so you get like a third of that candlestick today. Okay, what was the range? 21. So you picked up 7 points of trading probably. Let's call it 66, and the low was 57. Yeah, exactly. Well, it was more like 8 points, 8 or 9 points. Okay, so that would have been a decent trade. Once you got below that lower wick of the previous candlestick, you trade the rest of that lower wick on that candlestick there. Okay. So what's going on here with wheat? Just as I'm looking at this, how would I trade this right now? Well, I would trade it short side when the opportunity presents itself. You've got to be careful because this is pointing up, okay, and this is starting to try to curl and go up. So, but if wheat gets rejected off the 50-day and you get red candlesticks, by all means trade it, especially if the candlestick gets below the body of the previous candlestick, okay, which in this case already has because this is a little doji. Of course, use your stop losses and all that, guys and gals, as always, Be smart. Don't leave positions hanging. Let's look at the monthly. Got a red candlestick here. It's not a huge red candlestick, but it's red. Okay? It's kind of an indifferent candlestick. But we've got divergence warnings here, and if they stay there by end of December, then that's going to give a lot of weight to wheat's going to decline in price on the monthly chart. Okay, weekly, wheat trying to cross over on the MACD. May get a bounce. Could get a bounce here. SMI is not in agreement. So only the Big Daddy, which is still pointing down itself. It hasn't turned yet. So it's trying to, but it's still pointing down. MACD, it hasn't really crossed over aggressively, okay? But for right now, wheat on the weekly chart still looks weak. Still looks weak. Let's look at the hourly. Well, last night, that was all tradable. That was all tradable right there. Particularly this candlestick right here was very tradable. Okay. And if that's all you traded, that's fine. That's 8 points worth of trading. If the only thing you did in wheat all day was last night, my time, at 3 a.m., okay, right around London Exchange time, okay, I think it opens up in an hour or two after that, but just before the London Exchange opens, if all you did is trade those 8 points worth, or maybe you got 6 or 7 out of it, that's still good money, guys. Okay? Still good money. And remember, as I talked about this before, guys, is $100 a day good? Is it? Is $500 a week good? $25,000 a year? Okay, so, how about $200 a day? Is that good? $1,000 a week? $50,000 a year, approximately? Be realistic, guys. Guys and gals, be realistic. I'm not saying you shouldn't go for it when there's good opportunities, but I see way too many people that they just take on way too big of positions. They have these huge expectations. They hit a home run once in a while, and they think they're going to hit a home run every week or every day. It doesn't work like that. That's not trading. That's not reality. Okay? All right. Let's go look at oats. Which, as you saw earlier in the suit, if you watched the beginning of the video, I traded my oats profit today. Nice position I had on for about a week. Timing wasn't so good on the oats entry, but it turned out to be good. Little bounce going on here on this new session. Small little. So we'll keep an eye on that. But oats has gotten significantly below the 50-day, so I mean, it finally, as I said yesterday, couldn't defy gravity anymore. And the Big Daddy says there will be a price bounce. It looks like the SMI is trying to come in agreement. But also, the MACD for now is pretty gappy, man. It's pretty significant gap in this MACD. So, for now, this still looks weak to me, right? You can just look at this all the way back here. Just weakness. Weakness. Boy, look at that. So, we'll see. This one little green candlestick hasn't convinced me that wheat's on some type of massive rebound, that's for sure. We'll see what these short-term indicators do, but for now, wheat continues to look like it's got more price decline potentially coming up. Let's look at the monthly. I'm sorry, I meant to say oats, guys. I'm sorry. Meant to say oats. Divergence warnings. That's a big month. This is a big down month for oats. Big down month. I've taken a one contract twice now. I've had nice position, a one contract position that paid nicely. So I'm not complaining. Made some nice money on oats this month. Okay, if these divergence dots stay there at the end of December, then on the Big Daddy, that's already a big deal. It's already a big deal. As you can see, no divergence warnings going back except for this one right here. Already a big deal, guys. And if we get a yellow one or a red one especially, that's going to be huge, huge. Okay. So the monthly chart looks like short-term indicators and divergence dots are saying oats is going to go down. Let's look at the weekly. Starting to get a decent crossover here. Just starting. Okay. I'm going to ignore these divergence dots because they're not of much use once these indicators start getting near the bottom. I don't really pay attention to them. Over here, that was significant. All of those were telling the story. And looking at this MACD, I don't think this is done. Now, we may get a bounce, and there could be January, February, March where things, oats gets this kind of rebound. It's very possible. Okay, but we'll keep an eye on this. But overall, long term, even on this weekly chart, I think there's some price decline. I mean, we're so far above the zero on the MACD. It's going to come back and visit it at some point. Okay, look at this gap. Let's just say this. I don't know what this is going to do. Let's just say it starts to flatten out a little bit. Okay, over here, somewhere in the middle of. Even if it stays aggressive, I don't know. Does one of these deals and somewhere from like 555 up to about 600. I can see that happening. I think conservatively, I could see 600 happening maybe sooner than we think. All right. Now, like as I said many times before with oats, I don't really pay too much attention to the hourly chart for intraday trading because it's so thinly traded. Okay, but it's okay for, like I said before, for trying to time an entry if you want to take a position. Okay. So Okay, guys and gals, I did put up a solar channel on the Discord server, so if you want to go check it out, you can. And keeping track of the current solar cycle, which looks like it's stronger than what was predicted, which is good. That's a good thing. So we had some decent solar flares here in the last couple weeks that have hit the Earth, messing with radio communications and telecommunications and internet and all that stuff. So that's actually a good sign that we have a stronger than was expected solar cycle so far. Let's see, that solar cycle I think was December of 2019 is when it started. So 3 years exactly, guys. We 2022? Yeah, 2022. So December of 2022, guys, would be the first big wave or peak to the market. Okay, there would normally be a peak about 36 months, about 3 years in, okay? So just keep that in the back of your mind. That's very, very common, 36 months after the beginning of the solar cycle. Okay, I think that's it for now, guys and gals. As I mentioned before, on the fixed income, going to be keeping an eye on that as we go into the new year to see what the Fed does with the Fed lending rate and see how much more they can mess up the domestic and international economy. So if they raise rates, we'll keep an eye on those corporate bonds. Talk to all real soon again next time.